Hey everyone, and welcome to The Explainer. Today, we're unpacking a hidden crisis that's been quietly, basically gutting an entire industry from the inside out. We're talking about the crypto space. But do me a favor, put aside the market crashes, the regulatory battles, the latest tech upgrades for just a minute. We're looking at a massive paradigm shift in how credibility itself is built, and honestly, more importantly, how it's lost. If you've been deep in the market, you've definitely felt this shift. You probably noticed that announcements just don't hit the way they used to, right? Or that major partnerships are suddenly being met with a collective shrug. Something fundamentally changed in how we digest information.
So, what if I told you that one of the absolute biggest credibility problems in crypto isn't coming from rug pulls or massive scams? I'm gonna let that sit for a second. The real damage is actually coming from the way legitimate projects promote themselves. Yeah, no kidding. Over the last few years, trust in crypto media, project announcements, and standard press releases has quietly collapsed. The fascinating and kind of alarming part is that most people haven't even noticed how serious this foundational problem has become for the industry's entire future.
And this brilliantly illustrates exactly what we're dealing with. For years, the operating myth in Web3 was simple: visibility equals value. You blast out a press release, you buy a billboard in Times Square even if you literally have no working product, you get covered by a dozen crypto blogs, and boom, instantly you have authority. But reality has completely fractured that shield. The sheer volume of vaporware and short-term hype campaigns using those exact same PR tools has fundamentally damaged trust across the board. I mean, think about it. The aggressive marketing tactics that used to confidently signal a legit project arriving on the scene, they're now often viewed as massive red flags by a deeply burned audience. The standard playbook literally became the warning sign.
All right, moving right along to Section 1, the hidden trust crisis. And as we'll see, this is definitely not just a PR problem.
If we look back chronologically, early crypto grew through unbridled organic attention. Groundbreaking tech and wildly new financial concepts naturally generated massive headlines. In that era, press releases were a standard useful tool to simply distribute facts. But then, the landscape shifted. Opportunistic projects realized they could just buy the microphone. They started pumping out PR purely for fleeting visibility, flooding the market with empty announcements, minor updates dressed up as revolutionary breakthroughs, just aggressive hype. The medium was completely hijacked. The audience stopped believing the headlines because, frankly, the headlines stopped reflecting reality. This is exactly why we say this is not a PR problem. It is a fundamental trust problem.
Let's jump into Section 2, the Web3 hype machine. This is where it became all about visibility at any cost.
Let's move to the timeline and see how this builds, because it's wild how this hype machine actually compounds over a standard market cycle. In year one, you've got a massive bull market creating an insatiable demand for exposure. Everyone wants in, capital is flowing freely. By year two, competition skyrockets, pushing projects into a desperate phase of pursuing visibility at absolutely any cost just to attract users. This bleeds into year three, an era pretty much entirely defined by overhyped announcements and incredibly weak fundamentals. Projects make unsustainable promises merely to cut through the noise of their competitors. And the inevitable hangover? Year 4 leaves us with deep, systemic audience skepticism, where literally every promise is doubted and every announcement is scrutinized.
The compounding damage across the ecosystem is stark, and it touches every single participant. Let's be real. Not every headline deserves trust. Not every announcement creates value. Not every project survives. Because of this cycle, investors have become highly skeptical. Traders have become deeply cautious. Communities, having been burned before, are so much harder to convince. You've probably felt this yourself when researching a new token or looking into a protocol, right? You immediately look for the catch. This means true media credibility has become exponentially more valuable, while basic brand trust has become incredibly hard to earn. The easy days of hype-driven marketing? They are definitively over.
Which brings us to Section 3, Trust is Scarcity. This is our new market reality.
We've officially entered an era of trust scarcity. Today's retail buyers are highly skeptical, and they research deeply before risking a single dime. Think of it like a highly sought-after digital asset with a strictly capped supply. In a largely trustless ecosystem, actual human credibility is now the rarest commodity out there. And basic economics tells us that scarcity inherently creates immense value. The projects that are winning today aren't the loudest ones shouting in the room or buying the most ad space anymore.
They're the ones who have survived multiple cycles and proven their credibility over time. Trust is absolutely the ultimate premium right now.
So, what are the surviving high-value brands actually building on? Well, they're relying on 4 distinct foundational pillars that replace the old hype model. First up, consistency. Showing up, communicating, and shipping products even when the market is deeply in the red and everyone else has gone totally quiet. Second, transparency. Being radically honest about development hurdles and timeline delays instead of hiding them behind a wall of jargon. Third, reputation. Actually honoring the commitments made to the community cycle after cycle. And fourth, repeated visibility. Maintaining a steady, reliable presence over time rather than just blasting out a one-off hype campaign. People simply do not trust temporary noise anymore. They anchor their investments and their time to these 4 pillars.
Okay, let's dive into this. Section 4, the new PR playbook, and how we go about building true authority.
Smart, surviving projects aren't using PR as a hype machine anymore. They treat it as a long-term authority engine. They follow a very deliberate, interconnected sequence. It all starts with reputation building, establishing a provable track record of delivery before ever asking for a dime. Next comes narrative reinforcement, consistently telling a coherent, honest story across all channels so the audience knows exactly what you stand for. Third is search visibility, ensuring that when a skeptical investor inevitably Googles you, credible third-party validation shows up on page 1, not just your own paid posts. That leads directly to authority positioning, where founders step up and are positioned as legitimate industry experts offering real value, rather than just acting as token promoters. Finally, ecosystem awareness, demonstrating how the project tangibly contributes to the broader Web3 space. This sequence isn't about a temporary spike, it is all about compounding credibility over time.
And finally, Section 5, attention versus longevity. Let's get to our final takeaway. So the crucial point is this: attention creates awareness, but credibility creates longevity. It's a simple distinction, but man, it's a profound one. The future of crypto marketing won't belong to whoever buys the biggest billboard in a single weekend or whoever goes viral for a controversial tweet. It will belong to whoever earns the most trust over the years. Because while attention can certainly compound and bring eyes to a project, credibility compounds with far more durable, market-resistant results. It creates a moat that competitors simply cannot buy their way across, no matter how much funding they have.
As we wrap up this explainer, I want to leave you with a thought. When the next major bull run hits, will your project or the projects you support be remembered as a fleeting spike of noise or as an unshakable pillar of the ecosystem? If you want to be on the side of longevity, the core strategy has to change today. For those looking to make that crucial pivot away from the hype machine, you can explore Forex PR Wire to discover how strategic PR actively helps financial and crypto brands build real visibility and authentic authority. Thanks so much for discovering this with me, and I'll catch you on the next explainer.
Subscribe and visit Web3 Newswire for visibility and credibility of your Web3 projects.